Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of Geojit Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Satish Menon, Executive Director. Thank you, and over to you, sir.
Thank you very much, and welcome and a warm good evening to everyone who is attending this fourth quarter earnings as well as the full financial year 23 earnings call. With me on this call, I have my Managing Director, Mr. C.J. George, my colleagues on the board, Mr. A. Balakrishnan and Jones George, and our CFO, Ms. Mini Nair. I would just like to take you through the synopsis of the fourth quarter earnings as well as the full year, some broad numbers, and then maybe we can open for Q&A. In terms of total income for the fourth quarter, we have done 116.83 crores, which is similar to what we did in the third quarter, and a 5% drop from the previous year. In terms of the full year, the total income stands at 447.62 crores, 11% drop from the previous years. When you split the income, equity and equity related, that is primarily the brokerage services, we have done in quarter 4 62.42 crores, which is 16% down from the third quarter and 25% down from the full year, from the fourth quarter last year. And for the full year, it is 282 crores, which is 21% down from the last year. In terms of financial product, we have done 32.97 crores in the fourth quarter, which is 39% up from the December quarter and 31% up from the similar period last year. And for the full year, 98.78 crores, which is up 21% from FY22. And financial product distribution is split into primarily two items: mutual fund, full year income of 71 crores, which is up 16% compared to the last year, and an insurance income of 23.95 crores, which is 33% up from last year. Software, 2.13 crores for the quarter and 10.48 crores for the year, which is down by 13% compared to FY22. Total income, 447 crores, 11% degrowth. In terms of expenses, total expenses is 87.89 crores for quarter 4, which is 2% up from the December quarter and 14% up from the same quarter last year. For the full year, it is 328 crores, which is 10% up from the FY22. PBT is 5% down for the quarter compared to December, and for the full year, it is 118.93 crores, 41% down from FY22 PBT. In terms of PAT, 30.15 crores, which is up 20% from the December quarter, and for the full year, it is 100.96 crores, 35% degrowth from FY22. In terms of stock market volumes, cash market volumes was down by 36% Y-on-Y, and in terms of F&O, 70% up. The cash market yields remained more or less the same at 0.163%. 83% of the volumes and 57% of the brokerage comes through online, that is internet as well as mobile. Geojit Mutual Fund AUM, more or less the same as to last year, in spite of 643 crores of net inflow compared to 490 crores for the previous year, up by 31%. So this is the broad numbers. Now we can open up for Q&A. Operator, up to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and one to ask a question. Our first question is from the line of Mr. Varun Bang from Bryanston Investments. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah,
Please
Varun.
go ahead.
Thank you for the opportunity. I have a couple of questions. First is what we are seeing is of late, the larger brokers are gaining market share at the expense of smaller brokers, and smaller brokers, they have higher cost of capital, and thus they are unable to offer funding at competitive rates, and they are also unable to keep pace with the rising compliance. So what I'm hearing is some of them are shutting down, and while sub brokers of the larger brokers. So how are we looking at capitalizing this opportunity? Given our strengths in the current environment, what is our strategy and how are we executing? That's the first question.
Okay.
Sabesh, can I take this question?
Yes,
I'm CJ George here, Managing Director of the company. I agree with the observation that a significant number of brokers are in a mood to quit the stock exchanges through active membership due to the reasons that you have explained. We are in touch with many small brokers. We are also planning to offer attractive terms to these colleagues who have been in this business for last many decades in few cases. So we are also going aggressively and contacting them, and we'll be very happy to work with all these potential partners. This is my observation with regard to this. I have to make one more point in addition to what Sadesh said, which is also relevant to the question that you have asked. Last year, we had declared and paid 3 rupees per share dividend. This time, this dividend is now changed to 1 rupee 50 paise per share of 1 rupee face value. So this is our information I wanted to share with you. I hope this is fine. If you have any more questions, I can take it up later.
Yeah, Varun, what was your next question?
So Varun, may I request you to unmute your line?
Hello, am I audible?
Yeah.
Yes, you're audible now. Please
Yeah.
go ahead.
So the second question is in the context of previous question. So how easy or difficult it is to consolidate acquisitions in this industry? Is it very difficult? Just trying to understand.
Varun, thank you, Varun, for this question. It was very difficult in the past, but in terms of at least relatively speaking, the process is eased a little bit. It's also because due to a lot of regulatory changes, the customer stickiness is probably something which is very, very important in this kind of a transition. But what we have started noticing is that this is probably the right environment at the moment, unlike the past, because many of these smaller brokers were offering, personalized service, personalized credit, etc. So none of these will personalized service will work, but personalized credit that need not work in the new environment. So because of that, it is relatively easy compared to the past to transfer the customers. So this is something what we have observed in the recent past.
Okay, that is helpful. And what I've seen is in the previous down cycles, we have always, proactively brought strong control on operating expenses. But what I'm seeing differently in this down cycle is that Geojit is expanding branches and also adding employees. And there is steep rise in employee costs as well as operating expenses. So just to get a sense of what is happening and, what are we doing differently in this down cycle versus the previous ones?
Satish, I will take this question also. So let me be very frank with you. If you look at 22-23, this is the first post-COVID year. So all those customer relationship activities that were postponed in 2021 and 21-22 were taken up in 22-23. So we have active customer relationship kind of engagement through 350 plus branches. So it's slightly different from probably the parallels that you have in mind. So because of that, travel cost has gone up. And then if you ask me, the major increase in the costs are basically in connection with some investments that we are making. For example, advertisement cost has gone up. Investment in technology, the CapEx as well as the OpEx has gone up. So these are, apart from the employee costs, even in a bad market, we thought of, increasing the number of branches. We went ahead and added 25 more branches in last 18 months or so. These branches are, many of these cases, these are in rural areas. So we go ahead and start developing relationships in the deeper interiors of the country. So this is also part of our policy. This is definitely for the short term increasing the cost, but we are very confident that we can manage over a mid-term period. Thank you.
Okay. Just one last question, sir. I was looking at the business model of Charles Schwab. They too started as a broking entity, but eventually they diversified into wealth, lending, asset management, and so on. So one thing, whatever they did, they thought of doing it at a scale, and they offered everything at a lower cost. And they always focused on, acquiring larger number of clients, and they also acquired a lot of companies. So, and this ensured that, irrespective of the market scenario, they grew. So I'm sure, you would have looked at their journey. So my question is, in Indian context, how do you think the situation is different? Can something similar be worked out in India? And like Charles, I think Geojit also has been pioneer in doing a lot of things for the first time. So from our perspective, is it possible to do something similar at a size and scale what Charles Schwab did? If you can just share your thoughts, that would be helpful.
I will only make one remark because it is largely general. The regulatory environment is totally different in India. Most of those leading brokers in the United States are also banks. That means brokers can get membership, brokers can get the bank license on top, unlike in India. So their ability to hold customer cash and then basically to offer various products to customers is very high, and it is scalable. Whereas we have significant limitations. In India, broker is not fit and proper, even to be on the board of a bank, whereas the approach is slightly different in the US market. So it is not comparable in my view. Probably I am very sure over a period of time, when there is consolidation, when there is institutionalized business development, etc., maybe regulatory changes will also happen. So at the moment, in my view, these are not comparable. But we'll be very happy and we are very keen to offer all the investment products that we can offer to customers. Thank you.
Okay, thank you. I'll join back the queue for more questions.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Mr. Ratish Nair, individual investor. Please go ahead.
Thank you, sir, for giving me the opportunity. So I got two questions. First question is on the insurance premium collection. So what would be that for the quarter and for the full year? And my second question is on the net inflow of mutual funds for this year compared to the last year, sir. Thank you.
I will take this. So insurance premium collection for the January-February quarter was 48 crores. And for the full year, it was 78 crores compared to 57 odd crores for FY22. So, of course, thanks to the tax announcement made by the FM also helped us in the January, February, March quarter. Net inflow, because I already covered in my beginning, in my first talk, we did 643 crores of equity mutual fund net inflow compared to 490 for financial year 22, so which is a growth of around 31%.
Okay, sir. Thanks, sir. That's a great, sir. That's all from my side.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. If you wish to ask a question, you may press star and 1. I repeat, ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Sumit Jankar from Vardism. Please go ahead.
Thank you for providing me the opportunity. My question is regarding the cash market ADTO. I am seeing in the PPT that the cash yield has dropped and also the ADTO has dropped. But as if ADTO drops, the yield should slightly increase. As we look into derivatives, the ADTO is increasing, the yield is dropping. So when ADTO drops, it usually should increase yield. So can you put some light into this?
So I did not understand the question clearly, but the cash ADTO is 304 crores, which is compared to 477 crores, so there's a drop there. But the yield at 0.163% is more or less similar to 0.167, 0.168. So it doesn't mean, so you should understand this is the blended yield of cash. It is not the delivery business only. It is a blended yield of cash, which includes day trading as well as delivery. So as the percentage mix changes, the yield can also change.
Okay, sir. Got it. And my second question is regarding the client acquisition. So are you looking to increase the client acquisition in coming quarters? And what would be the reason to drop client acquisition in previous quarters?
So this is primarily coming from the market sentiments. If you look at the sentiments and if you look across the industry, even if you look at the growth in the DP account, because the market was subdued in the January, February, March quarter, the entrance of new clients in the quarter was subdued. So that is what we have seen more or less across the industry. But I can only show you a small change which has happened in the active clients. This is the active clients that NSE publishes every month. There, what we see is Geojit has a positive growth compared to most of the other competitors which have seen negative growth. So, but to answer your question, it is primarily because of the market sentiments.
Okay. Thank you, sir. And best wishes for you. Thank you.
Thank you.
Thank you. Our next question is from the line of Varun Bang from Bryanstone Investments. Please go ahead.
So my question is with respect to implementation of ASBA in the secondary markets. How do you think industry is prepared for this, and how do you think this implementation will pan out?
So ASBA, as of now, it is optional. It is the preference of the client whether to do ASBA or to keep the money with the broker. There are still some challenges in terms of operational if it is made compulsory. Our feeling is we still need to see how it evolves out. As of now, because there are a lot of transactional advantage a client has when he keeps the money with the broker. So till that time, all of them are sufficed in the new ASBA rule. I don't think as of now a large chunk of people, that is my personal feeling, a large chunk of clients will move to ASBA.
Okay. And would this implementation, make our balance sheet a bit lighter in terms of the overall working capital requirement? Because the settlement will happen between client and the clearing corporation. So I'm just trying to understand.
I don't think so, because it is only a channel. So what today happens is the client keeps the money with the broker, and the broker next day pays the exchange. If an ASBA comes through, the directly client will pay to the exchange. So I don't think it will have much impact on the balance sheet of the broker. It is only a pass-through vehicle.
No, let me come in. Maybe yes. If the clients are paying in advance, etc., the demand for working capital might go down. But we have products like margin trading, etc. There we need to basically provide the facilities to clients. In my view, the clients, as Satish rightly said, the clients may not opt for ASBA at the moment, because we are already getting complaints at the time of quarterly payout, because clients are of the view that it is creating some amount of inconvenience to them. Although SEBI has done this in the best interest of customers, the retail customers, in our experience, they have considered it as more of an inconvenience to them. Thank you.
Okay, that is a helpful information. Thank you.
Thank you. Our next question is from the line of Mr. Anil R., individual investor. Please go ahead.
Thank you. Can you share the PMS income for this year? Thank
you. PMS income for FY23 was 8.23 crores. Also, I would like to inform you that the last year we have collected close to net 100 crores of new PMS subscription amount for Geojit PMS, and the book right now stands at 450 odd crores. It is compared to 8.23 crores compared to 17 crores for the FY22.
Okay. Thank you. Can you share the cash in the books also? If you can? That's from my side.
Cash in the books.
Yeah. This is Mini Nair, CFO. The cash is 665 crores in the books, but more than 1/3 of this cash is being used for MTF funding and also for clients' funding. And also we require working capital. So even if we have 55 crores of cash, we are using it for the regular business requirement.
Okay. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question.
Operator, if there are no further questions, we can conclude.
Noted, sir. As there are no further questions, I would now like to hand the conference over to Mr. Satish Menon for closing comments.
Thank you everyone for joining this call. Our officers are always here if you have any specific queries. Have a nice day. Thank you very much. Bye-bye.
On behalf of Geojit Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.